Okay, good afternoon, traders. Welcome to our second webinar. For the new traders for the new students that are here, we will be using Zoom. Our webinars is what most of traders use. It's a great app. So now, as usual, I'm just going to start with dollar index. You can see dollar index is still in the current place. Let me just zoom into the weekly chart. On the weekly chart, you can see at the same level as last week, not much difference. You can see this is the resistance broken, came back, current support. Now zooming into the lower time frames, we have 4-hour chart. You can see prices are in a falling wedge, and you can see now the 50 and 20 EMAs crossed under, and you can see this level. It's a quite minor level, but in order for dollar index to get stronger, we will need a break of this level. The minor level, but on the lower time frames, 4-hour chart, we will need to see a clear break of this level. You can see it did break out, however, it came back down, and what it's doing now is leaving a big wick. But there's 50 minutes left of this candle, so we will need to see some sort of clear break from this level, as well as this falling down wedge. Now going on to our next currency is USD/JPY. Okay, we're having some technical problems. Just give me a few minutes. Can you hear me now?
Yeah.
Okay.
The chart has gone up.
Yeah, can you see the chart now?
Yeah, it's coming up. Okay, cool.
Okay, so I did mention this level. We need a clear break from this level. You can see I've drawn the horizontal ray. So what you want to do, for all of you that are going to analyze yourself now, you can see this, go onto the trend, get a horizontal ray, then plot these levels, put a line in here, maybe one here. This is more of a zone rather than a level, you can see. So for a zone, what you want to do is you get these parallel channel tool, and then you plot this, make sure it's accurate, and draw this. For a zone, what you want to do is you draw these, and in order to give you confirmation for going long or short, you will need to say a break of this level right here. Okay, now going on to our next pair, we're gonna see USD/JPY. Now we did enter this trade, I think it was two times last week. Now our first trade, it was a short. I think some of you went short, even I did myself. And this is where we entered for a short right here. Now you can see why we entered this. If you look back, this is where it's a much of a zone. This level, you can see it touched here, multiple touches here as well, price. And you can see it came back down, broke out, made a double bottom, went all the way back up, retested this, made another lower high. So on the lower high, this is where we entered. If you go into the 1-hour chart, sorry, we're just going to leave it on 4-hour chart for now. Okay, you can see this candle formed a bearish candle, leaving a wick on the top. This was our entry right here, this candle. Now I wanted prices to come all the way back down here for around 100 pips. However, it did not. And this level, this candle right here, it went down to 40 pips. And after, I told most of the traders, if this candle closes like this, we're going to exit this trade, because instead of sticking to your strategy and knowing prices are going to retrace, you'd rather get out of this trade. And you know, you have to keep tracking your trades and see what's going on rather than just sticking to your plan, because sometimes you got to change your plan while in a trade. Now you can see after this candle formed, we got out, and you can see what happened. Prices did go up. Now our second entry came after, I think it was the next day. You can see prices were in a downtrend. It did break, and then it retested this level. Now zoom, let's go. You can see this level. But let me just zoom in into the 1 hour chart. Now for most of you, this would have been your entry roundabout here. This here, you could have entered here, engulfing bullish here. You can see it broke out, retested this, and you wouldn't enter there. This would have been your entry after the green candle. So it did go up as expected. It went up about, if you did get the perfect entry, you would have got around 80 to 90 pips. However, I did mention this level. Some of you left this trade over the weekend, which is there's nothing wrong with that. Some of you got stopped out because of this. There was some sort of data coming out. Now, I know one of you got out, and you was in, you set your stop loss at break even, and after you did get stopped out. But that's what market manipulation is. I think you made a great choice of getting out of that trade and putting at break even. You did re-enter, or I don't know who it was, but you left the trade, set your stop loss at break even, and you got stopped out, and that was the perfect choice you made. You know, a lot of people, they would have get stopped out because of this candle, and you know, they would be going all, my trade got stopped out. You will, like, you know, you get all those sort of emotions getting into you and all that stuff, but never let that things happen to you. This is what market manipulation is. You get stopped out because of these things, and if you get stopped out at break even, or I think you was in profit, you cannot ask for anything better than that. That's just, now let me just check something if it's recording. Okay, a lot of you got out because just one person got out because but that's nothing, that's normal. Now you can see prices were in a resistance zone. This is where it was. This is where prices were around on Friday. So he went up, touched this resistance, came back down, touched it again. Now you can see the second time it touched, it did not go above this line. So this is where level, at this level, you would consider getting out of this trade. You can see it came back down and it touched this uptrend, went all the way back. You can see it rejected to go up again. And that's 3 times it's rejected to go up. I did post this chart onto the technical analysis group channel, but some of you did leave it. And I'm not saying, oh, you shouldn't have left it or anything, but this is just where you could have thought about getting out of this trade. You can see prices went up, touched this level, came back down, touched it again, failing to go above this level, and third time it went up, failing to go above that level. This candle, after this red candle, bearish candle, you would think about getting out of this trade. And for most of you, that would have been around, depending on where you entered, let's just say that my entry was about here somewhere. Now that would have been like 70 pips, 68 pips. You know, you'd be happy with that. Now you can see market did open, left a gap, and dropped all the way back down here, and you retrace back. Now you can see prices made a lower high, lower low, lower high. Now it's making another lower low. You can see if it comes to this level, if we see this level break, we will look for some sort of correction in order to go short. However, if we see dollar index getting stronger, we may see some sort of rejection at this level. I did say this is gonna go up. You can see from this arrow. I did mention this. It was around about here, and it did go up at this level. It did drop. It's gonna drop. Now, if we see some sort of rejection here on daily resistance, 113.8, we will go long, and this time if you see this level break, you can see this level going all the way up. However, if this level does not break, we're gonna have to look. You will have to look to close this trade. If this level doesn't break, you can see this is it's going to become quite a strong level now. You can see it's touched it multiple times previous since 13th of January. So this is a strong level. Now going on to our next trade, GBP AUD. Chart is a bit messy, but I'm just gonna explain to you. Okay, so I did draw my fib tool, Fibonacci retracement level from the highest point. You can see right here to the lowest, which is here. And now you spot your 6.18 fib. You can see it's here right now. But this is where prices are now. This is where we entered for a long. Now the reason why we entered long on this trade is fairly simple. Okay, now you can see this level. I drew this level. Let me just take this off right now. Okay, I took my fib. Just give me a second. Okay, you can see this horizontal array. Take it off. Now you can see this is one level. This is where markets were about when I thought about entering this trade. Let me just take this off. Okay, leave that. We're gonna go on to that later. Now you can see this level, touched it multiple times. You can see this is where the trend started to form, uptrend. And now we're gonna get a horizontal ray. Okay, touch, another touch here, another one. Now you can see this is a strong level now. It's become a strong level, touched it multiple times. You can see prices did approach this uptrend trend level right here. And the reason this trend was respected was because of this level right here. Now you can see this is a bullish engulfing candle right here, the green candle. Let me just zoom in so you can see a bit clearly. Now this candle, after this candle was our entry right here, this bearish candle. You wouldn't know if that's a bearish because we entered on that level. The moment it opened, that's where our entry was. Well, some of you entered, some didn't. But if that was your entry right here, you could have closed on this higher previous high. We did see some sort of rejection, but our initial point, we was looking to sell this on the 6.18 fib, and you can see this trade went to 6.18 fib in a matter of 1 day and 12 hours. Now, if you did set this, if you did take this trade, say, okay, let me just get a risk reward tool. Okay. Now you can see this is your level. This is your trend. You've drawn your trend, uptrend. You can see you touched it here. Now you can see this level. You want to wait for a long to enter here. So what you want to do is you would wait for some sort of confirmation. You can see this bullish engulfing, that would give you the confirmation that this is going to go up. Now if you did enter, this would have been your entry. After this bullish engulfing, that would have been your entry, and your stop loss would have been below the lowest point. You can see just to put it a bit lower because of the spreads and stuff. So that would have been your stop loss. Take profit one would have been round about here, previous high. But if you wanted to take this trade for the 6.18 fib, where we would look to sell, okay, that's where you set your target. And that would have given you 1 to 7 risk reward ratio. You would have risked. You can see prices, the moment you entered, prices went up, did not go even test your stop loss. So your stop loss was around 40 pips. You risked 40 pips for 270 pips. 270 pips. Now, if you wanted to ride this trade all the way up to the 6.18 fib, if market prices were here, which is 70, yeah, this is the previous high. At this moment, this is where you would set your take profit. I mean, stop loss to break even. So risk-free trade. Now it did go down, made another higher low. You know, markets don't go straight in one line. It never does that. It never goes straight all the way down or straight all the way up. It will always make a higher high or lower low. Now, but this did go up, it did go back down. So you would say your take stop loss to break even at this point. Now it came back down, made another higher low, went all the way back up, and made another higher high. So when it makes another higher high, you would want to set your stop loss at this point. Now you would be in profit of around 50 pips. You would set your stop loss at 50 pips. This is where your stop loss is. Now it did make another higher high, came back down, higher low. The moment it makes another higher low, you would want to okay, this is your initial take profit. Okay, higher high, higher low. Set your stop loss to break even at this point on the higher low. I mean higher high. So if the markets are higher high, what you want to do is set your stop loss to break even though it was like a risk-free trade from the start. But set your stop loss to break even, made another higher low, went all the way back up, made a higher high. So at this point, you would set your stop loss to this level, the previous higher low, and it did make another higher high, another higher low. Now, it did make another higher high, but it did not hit your take profit. It was just a few pips away. So at this point, what you want to do, you could either exit it, which is a few pips won't matter. But if this made another higher high, and it did not hit take profit, so what you want to do is move your stop loss to this higher low right here. This is where you put your stop loss, and it came back down, made another higher low, and then did go up and hit your take profit on this candle. That's like 270 pips, 270 pips in one trade. I know none of you took this. Some of you took it, but exited round about just in one candle. Yeah, I know you're not used to it. You're not used to holding trades for longer, but you can get used to that, and it will all come in a matter of time. Now, what? Okay, I did end. Okay, that's it. Long position closed. Now we did come. I did post analysis for the short setup, and I did take this myself. Now you can see I'm currently up like let me just around 40 pips, 40 to 45, 40 pips. Now you can see this. I did mention this level breaking. Now I did not know what this was. This is where prices were at that time, so I didn't know what this whole place. You can see it's head and shoulder now, but I didn't know at that time because markets were about at that level, so I wouldn't know. Now I wanted to wait for this level to break. You can see this level, minor level, but in order to go short, you will have to wait for that to break. Because if you did enter, you can see 6.18 fib. If you did enter around about here, you know what would have happened? You would have got stopped out. Because with GBP pairs, it moves quite fast. You know, this went up about 60 pips. So it did come back here, touched it, rejected to go down. I was watching this pair, and then it went back up. At this point, you know, you would have made a head and shoulder pattern. There's the left shoulder, head, and the right shoulder. So if you want to get the perfect entry, you could have entered on one of these bearish candles and put your stop loss just above the previous high. So your stop loss would be above round about here. You can see there. Now these are the places where I'd set my stop loss. So for all of you that don't know, some of you just take your own stop losses, and you know, instead of putting it here all the way here, just put it on the higher low of the right shoulder. You know, that will give you a better stop loss. You know, if you get stopped out, this will invalidate the idea. You know, I've seen some traders, they would, in order to go long here, in order to go short here at this level, say for example, they entered here, my stop loss would be round about here, above the right shoulder, but most people would put it above the head. Okay, let me just, I got the wrong risk reward ratio. Now, if you go short from this candle, one of these candles, okay, my stop loss would have been here. Now, if we see this trade go up from this level, my trade will be invalid and it would have got stopped out. Now, for those or other people who put a stop loss around about here, above the head, and it will get stopped out as well, because if it invalids to go above this level, if it goes above this level, it will always go above this level as well. So there's no point putting your stop loss like don't be a lot patient with stop loss. I am very impatient with stop loss, and that's because it works for me. You know, I put my stop loss based on where I think the trade will go invalid. Now, if I put my stop loss, I don't put it exactly right on the highest high, like right here. I put it a little bit above in case of the spreads and stuff like that. Now, this is not where I entered. You could have entered right here, right on the right shoulder. You know, you came back down, tested this level right here, came back up, and it did break. You can see it broke around about here. The moment it broke, I think I entered on 15-minute roundabout here. Now you can see it went all the way back up, retested this level, failed to go above. Now on 1 hour, you can see it did break out, but if you go on the 4 hour, all you see is a 4 hour chart. On 4 hour chart, all you see is the wicks. You know, you can see the body zoom. You can see the body of the candle closing below the level, so it did not close above. Now going back to the 1 hour chart, I'm currently in this trade and I want to see this. You can see I've put this level. It's a quite major level, not major but minor level. It did break. Now I'm waiting for this trade to come all the way back. You can see what I said. Look what I've said. If this zone I mark breaks, I will look for zone. I will look for this. If this zone breaks, I will ride this trade all the way to this zone. And if I see this zone breaking, I will continue to hold this pair. If I see some sort of rejection at this level, I will get out of this trade. Now you can see markets made a higher. This is the higher high, higher low, and there it is. You can see prices did not make another higher high. So now that tells you this is going to go down. The bearish movement is going to start now. You can see this is the lower, higher high. I mean lower high. The reason why it's a lower high and not a higher high, because if it was a higher high, you would want to see prices close above this level right here. If it closes around here, that would have been a higher high, but it did not. So it made a higher low, and there is lower high, lower high, lower low, lower high, lower low, lower high. Now this is going to go around about somewhere here till it makes another higher low. So these levels currently, if I entered here, I would set my stop loss around about here now. This is where I'd set my stop loss. Another, it would have been in, right now I would be in profit. You can see the old EMA is crossing over. This is the 200 EMA. We can see on this candle, and then if this candle closes like this, we can see the 200 EMA going to cross over. So you can see the big movement is starting to come. This is where the big sellers are going to start coming. Now going on to our next trade. Okay, Euro USD. Okay, Euro USD. This is where you could have got a lot of pips from. You can see prices were in an uptrend, and there's the trend. You can see I did call out for a short from this level. Did come back down, retested this level, kind of consolidated in this zone. Let me just show you. This level did consolidate a little. You can see prices did not go anywhere. It was just consolidating in the zone. So you could have entered this trade on multiple levels. You can see prices did go up, tested this above higher trend line, came back down, tested it again, all the way down. Now, prices did break this level. I posted this analysis on the group. Broke. Let me just go on the 4 hour chart because 1 hour just looks a bit messy. Okay. Okay, this is the overall Fibonacci tool. You can see prices from the highest point. You can see, let me just show you how to draw the fib level again. Okay, for your Fibonacci, what you want to do is, I think I've mentioned this before in a previous webinar, but I'm just going to go over it again. Okay, what you want to do is get your fib level, fib retracement, find the highest point, which is here. and find your lowest point, which is here. This is your lowest point, and you plot your Fibonacci retracement tool and you look for these levels. You can see 6.18 fib. I mentioned this in my ebook. These 6.18 fib, 6.18 fib, 7.8, 78.6, sometimes 38.2. All these levels are major levels, and 50 level. Now you can see price is rejected to go above this 78.6 level. You can see it did not close above. You can see all the wicks going up, but the closing price of the candle, it closed under the 78.6 fib. Now what that tells you is prices are going to start going down. Okay, now you can see prices did break this level, this uptrend. It broke it, didn't go below this level. You can see it touched it, went up, touched it again. Now on this candle, this is where you look to enter. Let me just zoom in. I think there was some kind of data coming on USD, I'm not sure. But this week is full of news, guys. Just to put it out there, tomorrow there's going to be a lot of data coming out. So, and there's also NFP on Friday, so be careful on all those pairs. Before going on to a trade, please make sure you check all the data that's coming out. Now, if you wanted to go short on USD from the previous level, 6.1, 78.6 fib, you would wait for this level to break. You can see this is a major level. Kind of, okay, this level did break, retested this. So you want to look for a short setup around about here. Now this would have given you, if you did enter, it did go above like 80 pips to the previous low. You can see this level did not break. All these levels are marked on here, are key levels, and this is what market respects, and respects all these levels. Now, if most of you haven't heard of Astro FX, this is what they use. These levels, they mark all these levels, and it's not easy. It's not hard to do. It's just simple. All you do is get your horizontal rays and use these parallel channels. I'm going to do a tutorial on that. I know I've said it, how to set up your trading view account. Trading view chart, if you want to make it look a bit clear. Because I know when you go onto TradingView, you'll see all these background lines and stuff. I can make you remove all that stuff and make your chart a bit clear. Now I will do that at some point. Now you can see all these levels being respected. These are major levels. So if you look back, it's got multiple touches. Look at this, touch, touch, touch. Now touch. And the moment it breaks, this is where you look to find your entries. Now this level got multiple touches, touch. Now you can see it did touch here, but it rejected to go below it. You can see the 20 and 50 EMAs crossing over. What this is doing is prices broke the 50 and 20 EMA, and this candle is going to go above to retest this EMAs and start going down. Now if you see this level break, we can see prices to come to this level, 38.2 fib, and we may see some sort of correction, go up above and test this level and start going down all the way down. Now I think that's it for today. I will look out for technical analysis and setups throughout this week for you guys, but yeah, that's it. If you have any question, I know there's one person, but if you have any question, please just ask that now. So